Welcome back to Beyond the Cards, your favorite payments nerds podcast where we talk about the payment related news you want to hear most. We are mostly all back, but we are down one member because they are out on paternity leave. So kudos to them, and I hope they're enjoying their time off.
Yes,
3 weeks.
enjoy. Oh, 3 weeks. What do you do in 3 weeks?
Enjoy, enjoy yourself. I don't know. I don't have kids.
Oh, and we do have one thing I'm just going to blow. It is my birthday.
Woo! Birthday time.
Woo.
All right. So let's jump into it, right? So we've got some news out of the Netherlands today. Well, actually a little bit ago, but of course the Netherlands is very concerned about buy now, pay later, and more specifically, and I think we talked about this a little bit ago, which is buy now, pay later, we're all pretty used to it being in e-commerce, but now we're starting to see the applications of buy now, pay later actually showing up in physical locations. And this is seemingly concerning the Netherlands quite a bit. Mostly because they feel that, people are really starting to like overextend themselves. And of course, Europe having a slightly more flexible eyebrow when it comes to regulation is concerned that, as they're alleging, a significant amount of the revenue from these companies come from late payers. And of course, like the accumulation of debt.
Right. I think one thing that took away that kind of stood out is like, yes, you're trying to ban it, the buy now, pay later services, especially in physical stores. But I don't think that's going to stop the problem because you're banning it physically. You're not still banning it online. So wouldn't, in my mind, that would continue to bring more online e-commerce traffic, right?
Yeah, well, I think something that like stood out to me was they're reporting that children ages 13 to 17 made around 600,000 pay later transactions.
I saw that. I was like, what? They use their mom's account or something. Cause
like how are they accessing that?
Well,
really qualification rules, it seems, but
well, I'm sure there's some level of, I mean, this goes into the argument of like how stringent is age verification on these platforms, right? Like, is it their parents' account, etc.? Like, what happens if your kid does get access to your buy now, pay later account, goes to the mall, and the next thing you know, you're $1,500 in the hole because your kid just kept buying stuff.
Yes, and the thing I think that what the article highlights also, which is very interesting, is this kind of question that we tend to have also in this in this podcast is who is really responsible of that? I mean, is it rather the regulators to step in to limit buy now pay later expansion, or is it the market itself that should self-regulate? You see what I mean? So, I mean, it's is it the responsible of buy now pay later providers? It's this question that I have to admit that triggers me a little bit, because it's very hard to define who is responsible for that, for what. Especially, is it the merchant accepting also buy now pay later and offering also this kind of payment method, even if it increases their average ticket? At the end of the day, are they really, really the winners of this kind of behavior? So, always very, very difficult to respond.
Yeah, I don't think companies would really step in and self-regulate. Companies don't typically have a great track record of self-regulation. And I mean, I think it's one of those things where like there needs to be some level of I don't think this is going away, right? The cat's out of the bag. No one's gonna not want to use this ever again. But like, come on, we should probably have some alignment on some level of standard credit practices. Like, children should not be able to use this. One shouldn't even be able to make accounts. And like, how do you designate authorized users of a buy now, pay later account? Like, if you do want to have like let your kid use it for some reason, like maybe you have a 16-year-old who has to go out and buy some new shoes or a prom dress or whatever reason, right? Like, how do you then confirm the identity of anybody else using it? Because that's for me also it's the kind of fear is like from a fraud perspective of like, well, what if your buy now pay later account gets hacked and someone makes a whole bunch of purchases? Like, what recourse do you have? What recovery do you have, if any? Because it's still just there's just not enough, I would say, fair regulation in this space to make sure that these types of issues are not happening. And of course, straddling someone with a whole bunch of debt that now that they're responsible for.
Yeah,
Maybe it's
there's not a lot of requirements when it comes to setting up these buy now pay later accounts. Normally it's just there's no verifications, there's no income verifications. Some don't even ask for your income. It's just I don't know where they get their decisions from, because of course each one has a different dollar amount when you do sign up. But now a lot of them are, and I saw in the article that one problem that they face is the timing issue when it comes to in store physically. Now Claudia is to the point where it's an actual card on your Apple Wallet, so the consumer would know if I'm using the buy now pay later or not, because I'm using it as an actual card.
Yeah, and maybe it's an open window also, kind of open window for buy now, pay later providers to develop some additional features enabling risk scoring or stuff like that to be added. I know that it's quite complex. I don't know whether it's the road that they are taking, but it can be also an opportunity for buy now, pay later providers to do something else and to ensure that fraud and so on is stays at the same level at least as credit transaction standard credit card transaction.
Yeah, I think this is a good segue into our next topic, right? Which is, where do they even go to access this data about customers, right? Because what's really stopping someone from signing up with 2 or 3 different services and overextending themselves on all 3, because the 3 services don't talk to each other, so they don't really know. So we're seeing that good old credit score reporting entity FICO is planning to introduce buy now, pay later usage into the credit scoring system. So this will be very interesting because, obviously they're going to have to get data from multiple different sources. And I mean, I'm just reading through the tea leaves here, right? They centered on one specific buy now, pay later provider, and they're painting kind of a rosy picture, which is like, hey, for most people using this actually is helping them increase their credit score. And at most, there's not like a major adverse impact. I mean, yet, but I think there is some benefit in having some third party repository of these types of arrangements that can say, hey, you actually like shouldn't open this buy now pay later account, or you should restrict the amount that they can pay because they're also signed up with 4 other buy now pay later services as well that they're making payments on in addition to everything else.
Might as well, because it's they're still loaning out the money, so why not go into like the loan space to where you're tracking the consumer's payments, you're recording it, and you're reporting it to the FICO credit scores, and then when they're late, do the same. Because at the end of the day, even if you're not paying it, I still owe you. I still have a debt if I don't pay it. So it just makes sense for it to be useful to be recorded to your credit scores.
Well, and I'm sure there has to be a stop number, right? So there has to be some type of credit limit. Like Dan, you mentioned if they have, 5 different BNPLs, well, what's the max? There should be some type of max amount, just so that protection could be set in place. So if they go try to open, another one, or one's maxed out, it's recognized somewhere in the system, just so people don't. It could just be a very slippery slope for a lot of consumers.
Yeah, I definitely, and I think the slope is getting slipperier, right? Like, we look at other economic data, which is, people's household incomes aren't increasing that much, prices are going up, people are still buying goods in record amounts, but we're also seeing where we do have data and evidence that people are starting to fall behind on credit card payments because a lot of this spending is being done on credit cards. You have to assume that, people are probably also spending on buy now, pay later. And as it integrates into a payment method for more and more consumer goods and services, like the risk of getting overextended and potentially really damaging your credit score, especially when you're young, right? Like we're all young and stupid at one point and probably spent way too much money on our credit cards in our early 20s. Like how much damage can you really do to yourself early on that you might have to dig out of? And with there being less regulatory oversight on how much damage you're allowed to do to yourself, could be very interesting. Like, I mean, could you foresee buy now, pay later coming up in when people, have personal bankruptcy?
Yeah, that's a good question. I was about to say, buy now, pay later. It can, if you're not responsible enough, it can get you in more debt and more debt. It's literally like kind of like a credit card. If you're not responsible, whew. And if you don't have a credit limit and you keep going from one buy now, pay later to another, it needs to be a restriction.
Who has time for that as well? Like, I mean, I can barely maintain the one that I have. Like every time I use it, I'm like, what's my password again? But I'm still going to use it.
I use mine too.
Yeah, I mean, like I'm still using it. I would say I use it responsibly.
Of course.
But
I've never used one. Maybe I should try it.
What?
I mean, it's cool,
Here's
I don't know.
Here's me. And I've said it before. It lets you, like when you're buying from a specific store or something like that that uses buy now pay later, it lets you add the like expedited shipping into buy now pay later.
It does everything.
And, yeah, I switched.
Yeah, so as long as it covers the whole cost, you're good.
One thing I did read why it's very, like heavily utilized online and makes sense because I'm guilty of this people want to actually get the product and try it on, or, see it.
Mhm.
And so it makes it doesn't really change that piece, but maybe it's different in their mind, than using their credit or debit card too, because they're probably buying multiple quantities and then they're going to return half of it. I don't know. I mean, I'm kind of a returner on some things. Like I might buy 2 sizes and then return one. So I could see it being useful in that as well.
Yeah, I mean, listen, like I said, $30 expedited shipping for me to get my stuff tomorrow because I didn't buy it off of Bezos land. Like, and you're telling me I can split that $30 up 4 times? Like, well, of course I'm gonna add the expedited shipping. Like, of course I'm gonna do that. I want my stuff soon.
Yeah. But I do think there needs to be it needs to be viewed a little bit more deeply when it comes to recording and just restrictions. Because if people now are 13 and between that at that young, of course at 13 I'm not going to be responsible. So me at 13, I'm already ruin everything by the time I get 18. Maybe. I don't know.
Well, speaking of banks and such, we have some good reporting out of Payments Dive from, friend of the pod, Lynn Merrick, always putting out good information. That FedNow over the summer is going to boost its payment limit from $500,000 to $1 million. This is probably pretty great, especially because a lot of at least the instant payments we see being made over these networks are mostly between businesses and banks. So you're thinking of things like, payroll, paying taxes, etc. I mean, obviously us consumers don't really have this in our hands now. This is mainly being used in bank-to-bank or corporate-to-bank payments. But it's good because RTP, the real-time payments network, which, not to be confused with FedNow, right? We now have 2 payment rails, new ones here in the US. RTP is the clearinghouse. Has actually raised its limit to 10 million, right? And I think there was some news the other day that I think it was BNY Mellon, has the record for sending the largest instant payment, which is I think they did 10 or 11 million. They sent over the network. But yeah, I mean, at the end of the day, they're still just obviously in this article cites this. There's challenges to this network expanding. You have to think about all the different levels of financial institutions we have, especially here in the US, right? There are so many big banks, medium-sized banks, regional banks, credit unions, to implement these new payment methods and rails to all of our financial institutions, right? There's definitely a cost. Banks tend not to update their systems that regularly because it's expensive. So obviously the cost of upgrading these systems to support, whether it's because it I know FedNow uses the international standard, so ISO 222, upgrading all of that technology so that way you can actually participate.
FedNow is going to get up there. Just to when I looked at how much it costs to put into the system, I just want to make sure it does everything that it's supposed to do and limit the increase. So how would this wave do? I think they're going to put in kind of a little more within the fraud protection on that, on how to cover that 1 million if someone does send that over. and how to recover it. Seems like they're just ironing out some of the kinks to go ahead and launch that by mid-year.
Yeah, and I think that some of that, what you're talking about, Jasmine, in terms of the security is why we are still seeing, it sounds like from what I'm reading that there's still limited adoption. And looking at those that have chosen to adopt it, between the functionalities, have the receive only.
Yes, and not the spending. Yep.
Yeah, some of that security. So hopefully that increases that adoption rate.
I'm curious to see how these two, RTP and FedNow, I know, they're, see how they align or work or compete with each other.
Yeah, I mean,
go ahead, Dan.
Yeah, I mean, ultimately, that's going to be the there's probably going to be one majority winner.
Mm-hmm.
So it'll be interesting to see like which one and what niche they fall into.
One thing I was reading, you can think of this in two ways, right? There's going to be the business side, and then obviously on the consumer side,
the retail.
And I know we talk frequently about our rewards card, and kind of that whole component of it. And there is some feedback saying for the US specifically, when you compare these type of adoptions to, other countries, there's a significant love for those type of rewards-based cards. And so there's still going to probably be, a number of lower, interest from some consumers that just will not switch away from that, even though businesses would much prefer it.
Yeah, I mean, you're definitely, I just really see there being a major hurdle for consumer adoption. And even in like the B2B space, I think that while yes, you can want these as a business, once you eliminate rewards out of something, like we talk about it all the time, right? You have to have a carrot and a stick, right? No one wants just the carrot, no one wants just the stick. And you're gonna also have certain use cases where like maybe only your largest corporate payers are going to be able to do this, right? Like the majority of businesses in the US are small businesses, right? And they are not going to be tapping into these networks because they want rewards or they need credit, right? Like these payments, right? They're not credit based. So you got to have the money in your account before you push it out. I think it's good if banks are sending money in between each other faster. That's obviously good for the financial system. That's good for making sure other services can function better. And I mean, I think you look at these numbers and I would love for somebody to do this level of reporting or analysis to say, okay, yeah, there's all this volume on these new rails. Like how much of it is bank to bank transactions and how much of it is actually being driven by corporates?
Right. Like 10 million, RTP raised it up to 10 million. To me, that is more of a corporate to corporate or a bank to bank.
Yeah, it's definitely bank to bank.
Yeah, so say sorry, bank to bank, not corporate to corporate.
Any business who wants to pay me $10 million certainly can.
I will drop my wire information.
Drop that RTP, sweetie.
Exactly.
Well, talking about paying peers to peers, I mean, I would probably not consider this great news as being reported by Hugh Sun on CNBC. CFPB is dropping the lawsuit as well as essentially all enforcement. But this is specifically over a complaint that stemmed from the prior administration, CFPB, which was going after Zelle and the amount of fraud that's being incurred on Zelle. like the TLDR, right, is EWS and these banks basically have said they don't have a significant role to play in reducing fraud or providing fraud recovery for those who have been defrauded using this specific network. And now nothing's going to happen.
Like, nope, they dismissed it and said you can't bring it up anymore.
Yeah, that last bit really turned the knife for me and made me really, really sick. I don't think that we should be creating. To me, this is a clear sign to fraudsters to say, here's your new way to commit fraud, because guess what? There's going to be no one's going to chase you down, really. Like, unless, except for the person who was defrauded, right? And usually people who are fraud victims don't typically have the means to pursue legal actions on their own. And ultimately, I think it is within EWS and the consortium banks who run Zelle to really fix this problem. I don't think this is like, it's being touted as good news, and like, I don't know if I were the PR team here, I would not be saying this is great news. Like, you have to take some accountability and be like, although we're pleased with the ruling, like, we know that we have a lot to do to reduce fraud. And like, frankly, they're not really doing it.
I loved how they mentioned, how about we stop basically pointing fingers and collectively get together and solving an issue if there's a problem. I love how Lindsey Johnson basically said that in so many words. I do love that part, but I do feel like it that is kind of hard. I felt like that lawsuit was kind of hard anyway, because of kind of the rules that Zelle kind of put in place when it comes to sending money. It's always been a hard, like, pulling teeth to report fraud or even get your money back when it came to Zelle. Because it was like, you authorized this, basically. You know, like,
I mean,
we put so many parameters in place to where it's like, do you want to send this? Are you sure?
an alleged 870 million lost in fraud since 2017 is not an insignificant number.
It's not.
And again, I think like past precedent is something that we should all look to, right? Okay, but when has a bank ever done something magnanimous? Like, come on, right? If you give people the space and say you don't legally have to worry about this, they will say it's not my legal responsibility. I provide enough fraud protections. Too bad, so sad. Don't fall for fraudsters. Like, I don't know. We
they're
never allow that in the credit card space. Go ahead, Chels.
Oh, I was just going to say they're never going to own up to anything just out of the goodness of their.
We love working from home.
Look,
I'm sorry, I'm on mute.
Yeah, I mean, listen, we have very clear fraud protections for things like credit cards, right? Like, there's tons of recourse actions because it's the bank's money at the end of the day. So they really, really care about it. And to see kind of this like step back is kind of like but if it's your money, we don't. That's on you.
Yeah, it's just a lot of blame gaming going instead of a resolution.
Yeah, I just don't think that dismantling the CFPB and ending all enforcement actions is really the right thing to do, especially in this case. I think the CFPB, here I go. But I think it serves a very important purpose of protecting American consumers and setting a standard globally for what should be the expectation in protecting consumers. And I think time and time again, we see that if you allow predatory practices will emerge and they will be used. And so it's not great. Don't love.
Don't love it.
All right. So speaking of potentials for fraud, we wanted to take some time to talk about something we have been seeing pop up in the news and something that, obviously is very relevant. And now, full disclosure, I don't think we're particularly experts on all things within this topic. So please do not come after us if we say something slightly incorrect. But we want to talk about a new feature within acquirer and platform settlements utilizing Stablecoin, particularly USDC, in being able to support getting paid and sending money in USDC. So I would say if a great read is Number Goes Up by Zeke Fox, which is a very detailed history of blockchain cryptocurrency. It's honestly a fantastic read and covers so much ground, and really worth the read. But stablecoins, what are they? How are they different? Probably is the first place that we should start.
That's where I started.
That's what I know, right?
So when I looked it up, it was like it's a cryptocurrency pegged to a reserve asset such as the US dollar. I'm like, what is that? It minimizes price.
Yeah, so I mean, really, you have kind of the main critical difference between, say, like a Bitcoin or Ethereum, which are cryptocurrency assets that have speculative value. A stable coin is one, and this is like Tether, XRP, Solana. These are the coins that are pegged to either a fiat currency or they're pegged to real world assets like something like gold or some other asset that doesn't have a highly fluctuating value. So therefore, it's essentially quote unquote as good as a dollar, but it's just a digital representation of that dollar because it's backed by a real world asset.
Right. That was something I had to kind of research because I was trying to understand, okay, if you're accepting payments in this type of currency, right, what is your risk? If you receive it and then you want to transfer it into, let's say, an actual USD dollar for, what is the risk? What is the transfer rate, etc. So that made it much more clear that it's very stable, or quote, quite stable, right? It's typically like a 1-to-1 ratio as well.
Yeah, I mean, it's not without risk. I mean, not that I am an active cryptocurrency tracker. You know what? If that's for you, good on you. But right, there was a stable coin. I think it was like Luna, and it collapsed. So there's not without risk. But I think you bring up a really good point, Chelsea, in the fact that yes, you can transact in USDC, but if you want that actual USDC converted to fiat currency that you can actually use, you need to still go through an exchange platform to actually get that USDC or stablecoin converted into fiat currency.
I'm literally interested to see where this goes and learn more about it, honestly, to just do a deep dive into it to see like the value of it, what it offers, all of that. How will it help? Will it, save people money, save the clients and merchants money? Will people, be willing to take that as a payment method? How would that go? I'm willing to
I
sell.
have a lot of thoughts.
I'm like, ugh.
Go, Shira, go.
No, but for the payment industry, you can think about, because we tend to speak about currency, but there are not really currency right now, when talking about stable coins, because it eliminates everything regarding cross-border fees and so on. So it can be cheaper, it can be faster also for any cross-border transaction, because you can eliminate bank fees, but also some issues that some cross international merchants are facing as settlement delays also. So you can, of course, use it for that. You can use it also for automating payments, thanks to the smart contract, because what you have behind that is really the technology of the ability to build
It's a program.
those. Yeah, it's a program. That's it. Smart contract. So it could really, what we can think about in the payment industry is really the fact that you can bypass a lot of fees, and a lot of fees that are actually charged by the banks or payment processors. But the thing is that, as you mentioned also, is that if you don't use any national currency, you see what I mean, and you can
Yeah.
and using stable coins instead of any national currency, you can also, in terms of I don't know how to say that, but you can destabilize, you can unstabilize national currencies also. So this can be a threat also for this national currency. And what we can think, because you mentioned, for example, the crypto, but it's not really a cryptocurrency. You see what I mean? But at the same time, you can think about the same backwards as those. For example, you know that for example, it can also increase the money laundering and everything regarding tax evasion and so on. So it, for the government, for any government, it can be a threat. You see what I mean? So
Yeah. So let's talk about quickly here. What could be and generally this is the use case that we're seeing borne out more and more, and there's a lot of discussion on this as well, which is cross-border payments, right? So in your traditional cross-border payment, if you are making a large payment, it depends on whether the bank you are using is present in both geographies. So is there that bank network to then transfer that money overseas? There's currency implications, etc. For the most part, banks are fairly regional. So you have to typically use what is referred to as a correspondent bank. So let's say I'm trying to make a payment to Shiraco from Danco. My bank is not present in Shira's country, but my bank is part of a correspondent bank network that can send that money. So when I make my payment to Shira, my bank then sends the money to a correspondent bank. That correspondent bank then sends the money overseas, potentially to another correspondent bank or the actual receiving bank. And then if it goes to a correspondent bank, then that correspondent bank has to pay Shira's bank, or it can go directly. So when you think about that, right, one of the major complaints that we hear on the cash management side is this takes a long time. Every time that payment hits a new bank, there's fees incurred. It's slow. And because it's slow, you're running into instances of trading volatility, right? And foreign exchange rate
Yeah, I was just
instability.
about to say that, like the lagging too of that trade settlement.
So when you're thinking about stablecoin, right, this is instantaneous because the primary technology in which all of these things share is blockchain technology, which is in some cases, fully public ledger in which your transaction is recorded in the ledger. Everyone can see it. The wallet addresses are listed. and boom, it happens. That transfer happens. So we're talking about like cutting the cost of cross-border transactions into like what was the cost of electricity to process that transaction, and you can move lots and lots of money. This is where I think we start to get into a conversation about, is it a public blockchain or is it a private blockchain? So, you think about, is this a bank specific blockchain or a group of bank specific blockchains in which only those users can see what's happening? Or is it a fully public one where everyone can see everything? I think that's where you can come into challenges, because on the blockchain, while exchanges report to validate the owner of a particular wallet address, it's not required. So you cannot, at least in today, and from my understanding, ascertain the identity of a wallet owner without that wallet owner saying, hey, yeah, I own this wallet address. And I think that's problematic.
I also think it's a bit odd that I mean, I guess that there's also can be private or, like you said, per bank. But I would assume that there's going to arise something with companies and individuals having, maybe not wanting everything to be a digital public ledger,
Yeah, like I think personally I'm on the side of private blockchain with extensive KYC requirements to know exactly who owns that wallet, because that's where you get into like, the well-known and considered lesser sexy aspects of crypto and blockchain, which is it's all illicit, it's all money laundering and drug buying. So I think the challenge is, how do you separate yourself from that ecosystem to say, no, like this is let's say a bank owned private blockchain. We apply all of the same regulatory frameworks that we would for KYC, which, like, let's be clear, it's not like some banks haven't gotten in trouble for this recently for money laundering. There's just a lot of risk when you start to make things anonymous with these wallet addresses. And this is where I think I would caution acquirers who are starting to utilize stablecoins, because I would say, and I feel like I've seen, when you automate sub-merchants onto platforms very easily, you automate a lot of these KYC processes, especially in places where standards might be a little bit lower, you're going to let fraudsters on. Like, it happens all the time, right? And I think, and this is like, again, me getting on a soapbox here, but like, we know Visa is increasing their standards for chargeback management, with the, this is going to sound awful, the revamping of the VAMP program, where they're including VDMP, VDFP, and VAMP all into one new program with a lot more stringent requirements to reduce fraud. Is there a standard for USDC fraud? Like, who's going to regulate how much fraud is allowable on this new particular payment and settlement capability?
I don't know. I think there's a lot of questions in the air around it, because it's like there's so many questions. We need more. Like, I don't know. You could be asking so many questions in one setting. Like, okay, this and the third. But how will this work at the end of the day?
Totally. And
And how would this
one.
work with the US? Because cryptocurrency is not popular in the US at all.
I mean, I think that's, yeah, I mean, this is, where that industry is constantly looking for real world applications. This is one where I do think that there is value in cross-border transactions. Like, this sounds great. I just think that there needs to be technical regulatory oversight and just a crap ton of KYC. And the interesting thing, right, is like it's this whole concept is born out of like the whole DeFi, concept in ethos, right? Like central banks shouldn't be running the entire monetary system of the world. This is going to move this into the power of the people. Yeah, but most people aren't good. Like there's a lot of bad actors out there. So I I see the value, right? Like especially, like say you're a platform that supports freelancers globally and you want to connect somebody who needs a coding project or marketing or art creation, content creation somewhere around the world and you want to make sure that person gets paid and that they have good visibility on it. Like I think that's great. I like connecting those parties together and making sure that there's, seamless payments between them. But as part of that, right, I don't think that you can only optimize one part of the ecosystem. Like the other side of the ecosystem has to be equally healthy, which is I want to convert that to fiat currency because I can't take this USDC to go to the grocery store and buy myself some eggs, which we all know I don't eat. But like, you got to be able to convert it to fiat so that way you can actually do something with it. Otherwise, you're just going to be accumulating balances in these accounts that like aren't doing anything.
But imagine, because
especially when it comes to international and cross border, definitely.
Go Shira.
Yeah.
No, I was to say because you were mentioning, for example, decentralized finance, because this is this concept.
Oh yeah, that's what DeFi stands for.
This is DeFi. Sorry, but at the same time, what would happen if it was a government, for example, who would issue its own stable coin, and if it was at the government, so you would, in a way, shift the responsibility also to the government, because this could eliminate a fraud risk, because it's the government who would have its own stable coin, and it can also bring stability. But at the same time, it will be up to the government, which changes also from time to time. You see in several countries because of
There's a lot of that going on lately.
That would have total financial control over all the transactions. So you see what I mean? We can think about a lot of theories. I mean, a lot of scenarios also behind that. But at the same time, don't you think that it will be? I'm sure that it will still remain niche, for a long time. And I'm not sure that it's tomorrow that we will have global standardization and use of those stable coins, even for example, cross-border transactions and so on. So
I can already feel the crypto people just firing on their keyboard. Like, you are so wrong.
Yes, I know. But I wish they could. I mean, okay, let me be wrong, but I mean, it remained in niche. You see what I mean? And I'm not talking about, again, as you mentioned earlier, I'm not talking about the cryptocurrency by itself, cryptocurrencies, and the speculative format, you see, of that, but really about stable coins by itself. So,
I mean, we're talking about,
respond.
yeah, I mean, we're talking about technology that has existed for 15 years, and we're just now being like, maybe we can make it work for cross-border, right? Like, I think there's something to be said in that, and I think that just really kind of centers around just because we can advance technology as fast as possible and create potential new use cases, should we be creating those use cases and putting them like into production before we've had a chance to assess and analyze from a regulatory framework that's actually maybe a good idea? Like, isn't this like the like key concept of Jurassic Park? Like, just because you can doesn't mean you should. Well, I think we could probably, this conversation is not over. We'll obviously continue to watch this space. But I got to put the soapbox away sometime. So I'm climbing down, and good conversation, guys.
Definitely. I think we can revisit this again, and we'll have, new items to discuss, and there will be already significant changes.
As this unravels, yep. Mm-hmm.
Yeah, and please feel free to comment also, to write your comments, and so that we can discuss also about this topic.
Yeah.
Hit that like button and
comment.
subscribe.
Keep it civil. All right. Until the next one.
Bye.
Bye.
Guys.
Bye-bye. Thank you.